Welcome to InvestorHubX.com. Have you ever asked yourself, should I be investing or should I be trading? Both can make money. Both involve the market. But they require completely different strategies and completely different mindsets. In today's lesson, we're going to break it down clearly and simply. We will cover what is investing, what is trading, the key mindset differences between the two, and most importantly, which one you should choose. By the end of this video, you'll have clarity, not confusion. Let's begin. So, what is investing? Investing is about long-term wealth building. When you invest, you believe in the future growth of something. You buy it, and you hold it for years. Investors focus on long-term trends, economic cycles. They don't panic over small price movements. If the market drops 10% next week, a true investor might even buy more. Investing is slow, but powerful. It's like planting a tree. You water it, you wait, you let time do the work. What about trading? Trading is short-term. Traders care more about price movement than long-term fundamentals. They focus on charts, patterns, momentum, support and resistance, market psychology. A trader might hold a position for minutes, hours, days, maybe a few weeks. If you enter and exit a position within the same day, that is called day trading. If you hold the position for more than one day, that is called swing trading. Trading is faster, more active, more intense. It requires quick decision-making and strict risk management. It's like surfing. You don't control the ocean. You ride the wave. You trade with the trend. And remember, the trend is your friend until the very end. Now that we understand what investing is and what trading is, let's put them side by side, because the real difference isn't just how long you hold a position, it's the way you think. Let's compare them clearly. Let's start with time horizon. Investing is long-term. We're talking about years, sometimes even decades. An investor is willing to wait. They understand that real growth takes time. Trading, on the other hand, is short-term. It could be minutes, hours, days, or a few weeks. A trader is focused on capturing shorter price movements. Next, focus. Investors focus on value and growth. They ask questions like, is this business strong? Does it have long-term potential? Will it grow over time? Traders focus on price action. They ask, where is support? Where is resistance? Is momentum building? Is the trend strong? Investors study businesses. Traders study charts. Now let's talk about stress level. Investing generally comes with lower stress. You're not watching every tick. Short-term fluctuations don't matter as much. Trading can be higher stress. Prices move quickly. Decisions must be made fast. Risk must be managed precisely. One mistake can be costly. Finally, frequency of decisions. Investors make fewer decisions. They buy, they hold, they review occasionally. Traders make many decisions, entries, exits, stop-loss adjustments, position sizing, sometimes every single day. And this is the key. It's not just about how long you hold a trade, it's about how you think, how you react, and how you manage risk. So the big question is, should you trade or should you invest? The honest answer is, it depends on you. If you prefer patience, long-term thinking, and lower daily stress, investing may suit you better. If you enjoy charts, fast decision-making, and active market participation, Trading may be a better fit. Neither is superior. They are simply different games, and you must know which game you are playing. Because problems usually begin when people mix the two without realizing it. They panic like a trader, but claim they are investing. Or they hold losing trades and call it long-term investing. Before you decide whether to trade or invest, you must understand one thing: risk management. Here's a simple rule of thumb many professional traders follow. Never risk more than 1% of your total portfolio on a single trade. For example, if you have a $10,000 portfolio, 1% is $100. That means if the trade fails, your maximum loss should be $100, not $500, not $1,000, just $100. Why? Because survival comes first. If you lose 50% of your portfolio, you need 100% return just to break even. Professional trading is not about winning every trade. It's about controlling losses, small losses, controlled losses, repeatable discipline. To summarize, investing is long-term and focuses on value and growth. Trading is short-term and focuses on price action. They require different mindsets. There is no right or wrong choice, only what suits you. Whatever you choose, manage your risk. Survival comes first. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.